Making money trading seems like an impossible thing for most traders. But once you start seeing the profits, it feels illegal because of how easy it is. Support and resistance works well when paired up with a mechanical process that helps you identify the key levels of support and resistance. And in this video, expect to learn the exact process that you will follow to identify these key levels of support and resistance. Alright, so support and resistance is broken down into three segments. So number one is understanding the basics of support and resistance. Then number two is a bit advanced, and it's about using support and resistance to predict a whole day's worth of price action. And then live markets. So how exactly do you come to the screen and then use these key levels for you to take trades? Stick around because I have a big announcement that will help you in your trading. All right, let's jump into it. So the basics. Now, everything comes down to understanding the basics of how price action is. So we use these candlestick charts, but I think most of you don't really understand the significance of understanding the candles themselves. So understanding the exact chart that you are using. So this is a regular candle. So let's paint it blue because I like blue bullish. And then a candle usually has some wicks. So it has a wick or a tail to the upside and to the downside. Now, this is very important because this is where support and resistance begins. So if we label this candle, we have a high, we have a low, and then we have the open, and then we have the close. So this is a bullish candle. But what is really the significance of all these things? All right, so first things first, support is the low. So for every candle, the support is the low and the resistance is the high. So each candle has its own support and resistance. All right, so why is this important? So this is important because in order for you to identify high quality levels, you need to understand those levels. Like, why is this level a key level? Because there are so many levels you could choose. So this is how you start filtering out. If you have a candle, the high is the support, the resistance, and the low is the support. Now, let's talk about price action. So the next candle can essentially open and continue going higher. So this is very, very important because look at what has happened. Price has broken out of the resistance and closed above it. So what does this tell you? This is a very important and a strong signal that now we have people pushing the market, and there's a high probability that the next candle will continue in that direction. And so if you position yourself to identify support and resistance and then look at price action to start seeing where the market is headed, then you are headed in the right direction in terms of support and resistance. So if we break and close above support or resistance, so it can be even to the downside, which means it's a bearish candle to the downside, then this is telling us that we still have a very high probability of price either going up if it breaks out and closes above our resistance, or if we close below our support, then we have a high probability of going down. And remember, we have only used one candle. So this is the basics of support and resistance. It starts down to the candle. All right. So let's look at a scenario. So this is now the basics, understanding price action. So another thing you need to know is price will do three things. So say for example, you have a resistance there. Price can either come to the high or the resistance, break out, and then reverse. That is the first scenario. Scenario number two is price can break out and continue with the trend. And then scenario number three is price can break out and then start ranging. This is the only thing price will ever do. So it will either break out and continue with the trend, break out and reverse, or break out and stay within a trading range. Now, that covers the basics. So let's talk about the advanced markets. All right. So now you know that the candlestick is the basic unit of support and resistance. So how do we use this to start predicting the market? So remember what we've just said. We can have either price breaking out and reversing, or we can have price breaking out and continuing with the trend. So this is where we pick one. For us, we have measured with reversals. So what we do is, if price, so think of support and resistance. And I know this is what most of you have been doing, but you've been doing it the wrong way. So we have a high, we have a low. What we want price to come to the high. We sell at the high, buy at the low, like that. So we are selling high, buying low. So how exactly do we do this? Using the principles of candles and the highs and the lows being support and resistance. So let's go back to our candle analogy. So we have a big bullish candle like that. And then we have our wicks there. And then we have another wick down there. So this is our support. This is our resistance. This is our support. So what we can do is we can go to the daily time frame and start analyzing markets from a broader perspective. So Monday becomes this candle. So you can go to the daily and just do this. So Monday gives you one full candle, which means on Monday you did not trade. On Monday you just observed the market. Then you are waiting to see how Tuesday reacts to either the resistance or support. So Tuesday opens, breaks out. So in your head, you know, okay, if we have a breakout, we have a high probability of going higher. But remember, you are interested in selling, so reversals. So you are looking for the opposite of a breakout, which is a failed breakout. So what is a failed breakout? A failed breakout is when price breaks out, but then closes back inside of the range. So what it does, it gives you something that looks like that. Oh, come on. So it gives you like a shooting star or a pin hammer or whatever. So this is a failed breakout. A breakout in itself breaks out and closes outside of the range. A failed breakout breaks out, but is pushed back in, and now it's a failed breakout. Once you see this, then you know we are not going higher, we are going lower. Let's look at GBP JPY. So this is the daily time frame and this is Friday, so I want to start afresh on a new week. So this candle here, it gives me a high and gives me a low. All right, Tuesday breaks out. So you can see Tuesday breaks out, then closes back inside of the range. So this is what we call a failed breakout. That is our new high of the week. And so my prediction is that next candle is bearish. So we have a breakout. Now, when price breaks out, then we know that price is going higher. So this is Wednesday, we have a new high there. And so my theory is price will go up. I will not trade it because I am looking for a failed breakout. What happens? So price pins the high, then closes as a failed breakout on Thursday, which tells me to sell on Friday. What happens on Friday? On Friday, price again breaks out. This is not a breakout actually, it's a failed breakout, which tells me to sell on Monday. All right, so what happens on Monday? Boom, we have a sell on Monday. And on Monday, it closes as a failed breakout, which tells me to sell on Tuesday. Tuesday does not, whatever. Now, once Tuesday closes, we have a new high, we have a new low on Monday, and then Tuesday, now it's the current week. Tuesday closes as a failed breakout. Price broke out, closed bullish, which tells me to continue buying on Wednesday. So on Wednesday, we buy. Now, Wednesday is inside of this high on Monday and this low on Tuesday. So which tells me to continue buying until either price breaks out and closes above the high, then I can stop buying and start look for reversals. So what happens? On this day, we don't have any buy, it's on Thursday, but I'm still bullish. So I'm still looking for buys. So on Friday, we continue buying and still we are inside. So I will continue buying until I see a breakout. What happens? We have another buy, and this one is a failed breakout on Monday. So now I'm looking for sells. What happens on Tuesday? On Tuesday, we sell. All right. So once Tuesday closes, we start again. We start on Monday. So what happens on Monday? Monday sets the high and the low. Tuesday is just inside there. So which means I wait for Wednesday to see how Wednesday behaves. Wednesday breaks out. So we are bearish, but I am looking for reversals. So this is our new low on Wednesday. I am looking for a failed breakout. So still nothing until Friday. Friday gives us a failed breakout. So what happens? It tells me to sell on Monday. So we have a new high there. This is our new low of the week. And then Monday does not sell. All right, no problem. But I'm still bearish because we are inside of the high and the low. We have our sell signal. So we continue selling. And then on Tuesday, we have a breakout. So now we change direction. We are bullish. Tuesday closes. So we start again on Monday. So Monday gives us our low, gives us our high. Tuesday closes as a breakout. So we continue buying. So our theory is we are bullish until we see a failed breakout. So what happens? On Wednesday, again, price breaks out. So we are still looking for that failed breakout. Inside, we are still bullish until we see a failed breakout. We see a gap to the upside. We are still bullish until we see a failed breakout. So that is on Monday. Tuesday breaks out, still bullish. All right, so we start again. So we have Monday setting the high, the low. Tuesday breaks out. All right, we look for a failed breakout. And now we are today. So we don't have any signal yet. And so basically what you'll notice is that half of the time you'll be right, half of the time you will be wrong. And that is where the advanced aspect of it, in terms of the live markets, I will teach you how to identify and filter out the pairs that are aligned with what we want, and then the pairs that are not aligned. So for example, we are looking to sell, we have a bullish day. How do we avoid that pair? That is what exactly we will talk about next. But for now, you need to understand that, and this is the basic concept, that Monday will always set the high and the low. Then from there, we start to look at, do we have breakouts at the high, which is the resistance, or do we have breakouts at the low, which is the supports? And then we continue pushing the high like that until we have a failed breakout, which is our reversal signal. Yes, so let's look at GJ last week. So GJ, and let's use the 15-minute time frame now. So I suggest you go to settings, then go to session breaks, check that box and click OK. What it does, it has these lines which show you the open and the close of the daily candle. So it's easy to identify the high and the low and to identify areas where you can look for reversals, which I will now show you how to do. All right, so if we use GJ last week, we got a really beautiful reversal setup. So how did we arrive to that reversal setup? All right, so it was on a Tuesday. So yes, so we start on last week Monday. So last week Monday gives us a high and gives us a low. You can see starts here, ends here. Monday gives us a high and a low. Tuesday is inside. Wednesday breaks out, closes as a breakout. So this is the close. If it's the close is outside of the low, then you have a breakout. And then on Thursday, price stays inside. So far we are bearish until Friday broke out and closed back inside of the range, which gives us a failed breakout. A failed breakout is a reversal signal for the next day. So how do we identify how to sell and where to sell using support and resistance? And so now this is our new high, and then Monday does not sell. Monday just stays inside of the high and the low. No problem. On Tuesday is when the action happens. And now we have reached the live markets section. So buckle up. This is the exciting part. Let's do this. Let's talk about the live markets. So what is the exact step-by-step process that you need to follow in order for you to catch these high quality setups? All right. Step number one is time. So you have to come to the screen at the optimal time. And for me, it's usually the first 3 hours of the market open, usually 2 hours. So for Asia, my time is between 9 and 11 p.m. New York time. And then for London, my time is between 3 and 5 a.m. New York time. And then for New York, my time is between 9 and 11 a.m. New York time. You can also change your time on TradingView by clicking this time here. For me, you can see it's UTC -4 New York. All right. So once you come to the screen at the right time, then you need to identify the high and the low of the week. So think about it. The highest point price has reached in the last 7 days. Well, not really 7 days, but from Monday. So for example, in our case, if you are trading on Monday and Tuesday, then you have to look at the previous week's Monday. But if it's on Wednesday, then that is the current week, and you can use the current high of Monday and Tuesday. All right, so if we look at our current high of the week, when we come to the screen at 3, yes, at 3, we see price has already broken out of this high set on Friday and extended the high. So this is our new high of the week. All right. So once you identify the high of the week and the low of the week, then you have your where. Because remember, you want to know where you want price to come to. Then in your head, no, if price comes here, then does this, then does this, then I will get in. So you already have an internal process that you are following. Once you have your high, you have your low. What you do is wait for price to come to that high. So we use the 5-minute time frame. All right. So what we want to see is price going up to that high, which is our resistance. So we want price to come back to resistance, and then we see it being rejected. So how do we do that? So price has come to the high, and we have this up here. This is what we call a liquidity grab, or a stop hunt, or a liquidity sweep. This is very important because this is what actually triggers your entire process. If you don't have a liquidity sweep, then you don't have any business trading. All right, now let's talk about price movement. So if we are in an uptrend, price will always be creating higher highs and higher lows like that. And it's the same thing that has happened here. Price goes higher, gives us a low, goes higher, gives us a low, has gone higher. All right, so our thinking is, if price comes to any of these lows, so we have 2 lows there. So these lows have potentials of becoming levels. So we want to see price coming back to it and then getting rejected. So now you have not 1 touch, but 2 touches. Once you have 2 touches, you have a level. So let's watch price action and see what happens. So I want you to pay very close attention to this particular area here. So this is an area where we can see a level forming. So what happens? Look at that. Price comes to that area, taps it, then boom, it's rejected. So now you have a level. You have a level. This is how you identify levels. Now, think about it. This is now your support. This is your support. This is your resistance. Remember what we talked about at the beginning. Breakout. If we break out and close above a resistance, we are definitely going in that direction, to the upside. If we break and close below support, we are definitely going down. And remember, we are reversal traders. So we have come to a significant level. We have created the most recent level. So if price breaks below it, so this is not a breakout, the next candle is the breakout. So price has broken below our level. So you get in, that is your entry. So remember, this is the exact process you follow in live time. So if you can follow this process diligently, obviously, you'll never have to worry. This is why it feels so illegal, because we are targeting a 1:5. Once price, if you are right, and once price starts going in your direction, then there's nothing stopping it. Price will just go and go and go, and you get out with whatever it is you want. So for us, we are comfortable with a 1:5. So if per month you are looking to take 10 trades and you have 5 trades that are winners that look like this, do you think you'll ever worry about losers? Because that is almost 20% in winners and then less than 10% in losers. So overall, you are in profit. And this is how support and resistance works. If we close above support, we are headed in that direction of the breakout. If we close below resistance, so support is down. If we close below it, we are going down. Resistance is up. If we close above it, we are going in that direction. So an important note to make is that a level, for it to become a level, has to have at least 2 touches. So say for example, you want to buy. Then you want to buy once price breaks resistance. And so your buy is anywhere above that resistance. And if you are selling, then you want to see 2 touches. So this is not a touch. We want to see rejection there before price breaking out. So now we have 1 touch, 2 touches. This might just be a situation where price was just going higher. And so if you want to sell, it's anywhere below the support. Once we break support, we are headed in that direction. So this is the exact process that you need to follow in order for you to catch high quality setups without any stress. Now, if you got value from this video and you would like to work one-on-one with me to understand the strategy even deeper, I have a mentorship going on. Link will be in the description for you to book a call and see if we are the right fit for you. And if you want to learn the strategy through a free course, then join us on school. Link will be in the description again. And lastly, if you don't have a reliable broker, then I recommend you use the broker I'm using, because so far I can't complain. I will also leave a link in the description. And if you got value from today's video, make sure you subscribe, and I will see you in the next video. Peace out.